Hello there, welcome to this week's final edition of Global Business Africa. In the next half hour, we'll have your usual wrap-up of all the key business news stories from across the African continent that you need to know about. I'm Ramanyang. Here's what we have lined up for you. Is this a boost of confidence for the Kenyan economy? We'll be looking at the impact of President Kenyatta's ICC case being dropped. How far away is Africa from a continental free trade agreement? We'll have the details. And sanitary pads made from papyrus. We'll tell you the story of a Ugandan innovative solution. Let us begin tonight with matters trade. The African Union's Trade Commissioner, Fatima Haram, has told African ministers a lot more needs to be done to hit the goal set out in the Continental Free Trade Agreement. You see, Africa's leaders decided way back in 2012 that the continent needs to have a free trade area by 2017. Now, the first steps of creating the necessary institutions and policies to get there starts in early 2015. So far, however, progress has been, to put it politely, slow. Fatima said fastening the process will lead to inclusive growth, employment and poverty reduction. The Common Market for Eastern and Southern Africa, COMESA, the East African Community and the Southern African Development Community, better known as SADC, are all expected to launch a tripartite free trade area later this month. Once launched, that agreement will form the largest economic bloc in Africa, and it should pave the way for the establishment of a continental free trade area in 2017.
There are two interrelated pillars of Africa trade agenda, which require the attention and enhanced focus of our ministers. One is the boosting of intra-African trade and the deepening of our market integration, and two is improving the performance of Africa in global trade and enhancing its meaningful integration into the multilateral system.
The fact that intra-African trade remains just one-tenth of Africa's total trade shows that improving regional integration is critical. But it also shows that engaging at the global, multilateral level also remains vital.
I applaud your objective to create a continental free trade area. The economic and development dividends of regional integration are substantial and largely untapped in this continent. But much remains to be done. Let me give you a sense of the few areas where we think work needs to happen. First is in the area of tariffs. In a recent research we have conducted at the request of the Africa, Caribbean and Pacific Group, we found that African countries face higher tariffs in other African markets than when trading with third countries.
Now, a leak from Shell's major Bonny pipeline on the 22nd of November has spilled thousands of barrels of crude. That's directly affected at least 7 villages in Nigeria's Niger Delta. Fishermen have suddenly lost their livelihoods, and there's no sign yet of a cleanup or assessment crew from Shell. This incident, of course, is reminiscent of two devastating spills in 2008, which were, again, from Shell facilities. They affected Ogoniland, and the oil firm has been sued for damages.
Niger Delta fishermen are no strangers to seeing oil spill into their waters from leaky pipelines, but even they were shocked by the scale of the slick stretching for miles from a Shell facility across the swamps and into the ocean. Some 3,800 barrels spilled last November, according to an investigation by Shell and government officials. Local environmental activists say it ranks as one of the worst in Nigeria for years. Shell said the spill was caused by failed crude theft.
Whole shoreline is, spilled, soiled, and then contain volumes, pools of crude oil that will run into several hundreds of barrels. Along the shoreline, we've seen several dead fishes, dead crabs, crabs that ordinarily will see you and run.
Shell shut down its 28-inch pipeline carrying Bonilite crude on November 22nd, but the origin of the spill was from the smaller 24-inch pipe which was shut last year. Africa's top oil producer loses tens of thousands of barrels per day to oil theft that often causes spills, though many are also caused by corroded pipelines. A Shell spokesman said that some 1,200 barrels had been recovered as of December 2nd, and recovery efforts are continuing at the site on the Okolo launch on Bonny Island.
Since last week, Saturday.
We saw the spill last Saturday, and it has continued to spread. As a matter of fact, we cannot go fishing anymore. It has destroyed our fishing equipment and spread into our premises.
Shell is under pressure to pay damages on other spills. The Nigerian parliament said last month that it should pay nearly $4 billion for a spill at the offshore Bonga oil field. The Bodo community in Ogoniland is also suing the company for two massive spills in 2008 that devastated the area. Shell said SPDC, a Shell-run joint venture majority owned by the Nigerian government, deployed booms to contain the oil.
On the normal day, if we go to the river to catch fish, most times we do catch up to 50,000 in a day. If maybe that day did not favor us, we get sometimes 30,000 as a catch for a day. But ever since this pollution occurred, I can tell you we can't even make up to 5,000. In most cases, the fuel we buy before we go to the river, we can't even recover the money.
The United Nations Environment Programme has criticized Shell in the past for not doing enough to clean up spills and maintain infrastructure. Penina Karibe, CCTV.
On to East Africa's biggest economy and the top story in this country, the International Criminal Court's chief prosecutor's decision to withdraw charges of crimes against humanity that had been levelled against Kenya's President Uhuru Muigai Kenyatta. He was accused of fomenting ethnic violence after a highly disputed election held in late 2007. Analysts had expected the announcement when the evidence needed to validate the charges was, simply put, not found. At the same time, Kenya has raised about $750 million by tapping into its debut Eurobond. The country raised another $250 million through its 5-year tranche of the Eurobond at about a yield of 5% and another $500 million out of the 10-year tranche at 5.9%. Now, keep in mind, the original 10-year bond had a yield of about 6.875% and the 5-year one 5.875%. Proceeds from the bond will be financing major infrastructure projects and service other debts as well. Investors in Kenya have been watching this fundraising exercise fairly closely, partly because the market has faced a shortage of dollars due to a slide in revenues from tourism as a result of a wave of terrorist attacks and local high-profile killings as well. The public debt to GDP ratio is about 52% in the year up to June, up from about 44.5% in the previous year. That figure is relatively low, but a rise in government's borrowing appetite over the years has aggravated concerns about the sustainability of Kenya's debt in the long run. Now then, let's get you a bit more information here on exactly what reactions we're getting to the story of charges in the ICC being dropped. Miriam Bemad is live in London right now. Miriam, given the fact that this case against Mr. Ruto is still in progress, do investors and analysts on your end expect possible political infighting to derail policymaking in future?
Well, Rama, many analysts that I spoke with are saying this is a very sensitive case. Dropping the case against Kenyatta, an ethnic Kikuyu, will, while proceeding against Ruto, could create tension in the ruling coalition, especially at a time when the two men publicly worked very closely together, calling for national unity against a series of attacks by militants, as you were just saying. From an external position, though, there's very mixed views. You know, some say it's a positive outcome to help Kenyatta refocus and bring more stability. Others say they don't think it's a near-term threat to overall coalition stability, but it will definitely lead to more noise. Ruto has strongly signaled that he's going to continue to cooperate with the court ruling, and analysts expect that there will be some careful balancing within the coalition. Now, some investors also believe that Kenya is in a better position, but that there is an underlying risk that further progress on the Ruto case could actually, at a minimum, at least strain relationships within the government. And that could trigger instability, especially after the National Treasury Cabinet Secretary actually downgraded the government's growth forecast for this year from 5.8% to 5.5%.
Indeed. We'll have to leave there for the time being. Of course, this story is developing. We'll keep feeding you with the reactions and the analysis that we do get on this story moving forward. Let's take it to South Africa. The country's dominant power utility, Eskom, has increased the level of its rolling blackout as it aims to support its struggling power grid and avoid making it collapse over the weekend. Now, for the second time this year, Eskom has said it will need to reduce demand by about 4 gigawatts. That's roughly 10% of installed generation capacity in order to keep the grid running. It was forced to make similarly sharp cuts earlier in November. These are, however, the worst in 9 months. The state-owned utility has been scrambling to build new power stations to increase its supply margins, but it has been let down by delays in the construction of its 4.8 gigawatt Medupi power plant. An extended series of rolling power outages in 2008 cost the country billions of dollars in lost output. Quick run through equity markets here for you. The only three that we're looking at the moment, the EGX30, of course, in Egypt, being closed for trading today. With regard, however, to the longer-term picture, 12 months, what exactly has your money been doing? The NSE in Nairobi, the all-share index is up by about 25%. The NSE in Nigeria, however, in the red, down over the last 12 months by about 11% or so. You would, however, have made quite a bit of money if you put your cash in Egypt. In the last 12 months, it's delivered a return of 52%. Is Africa rising or not? We put that question to the World Bank's Vice President for Africa next. And we'll also be visiting Africa's largest solar project, the Jasper Power Plant in South Africa. Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening.
This is the first year that Africa will have more foreign direct investment than aid. And it's like the tipping point in terms of changing the way the continent is perceived. And I think this summit very much responds to that call. Now, whether it can materialize what is being announced is something that we'll have to check and see whether it happens.
We're 13 minutes into the hour. Thank you for your time. You're still watching Global Business Africa. Now then, Africa and its economies, of course, must do a lot more to fully realize their potential and to actually give some meat to this Africa rising narrative. Well, a lot of the wealth on this continent is still under the ground and it's underdeveloped in terms of human resources. The continent as a whole is falling behind as far as developing policies to tap into these resources are concerned. CCTV's Beatrice Marshall spoke to the World Bank's Vice President for Africa, Mr. Mark Diop, on these issues and quite a few others. Here are some extracts.
Can you give us an idea of the potential challenges, though, for African economies at this time, and what really needs to be dealt with over the next 12 months or so?
The potential is equal because we have the fastest population growth in the world. We have also a fastest rate of urbanization. So we have, combined with economic growth, we have right now a growing middle class, which has a higher purchasing power, and we should be able to consume a lot of goods which are produced in Africa, but produced also outside. It's also given opportunity for the productive sector in Africa to move in the value chain and to move from just producing raw commodities to transforming them for consumption by the new middle class in Africa and the new urban population. This is one part. Secondly, we have possibility also to export in sectors where we have less export in the past. Let me give you an example, garment. As the prices and wages are increasing in some part of the world, where they used to produce garment, for instance, we have now an opportunity for African country to invest that sector and be able to export. And it's starting already in places like Ethiopia, and where there were some investment which are made by China actually to be able to attack in apparel, in shoes and garment. And it's something that also happened in your own country in Kenya when you had the AGOA exercise where you saw a lot of light manufacturing booming in Africa. So there is a potential for light manufacturing in Africa.
There is a potential though, but African countries are now saying they no longer want to be just a supplier of raw materials. Are we really seeing a concrete effort of that changing?
Yeah, concrete effort that actually most of the investors, as I indicated earlier, like China, are starting investing in manufacturing, and they have started already in other places. So what are the challenges to accelerate that process? That was the question you were asking me. We have still some factor of production which are still expensive in Africa. Electricity in most of the African country is not, the supply of electricity is not sufficient, and when it exists it's sometimes too high a cost. So it affects the competitiveness of African countries when they're producing this type of goods. So we need to address infrastructure, and in infrastructure the number one priority is electricity.
Right. Now China though is heavily involved in Africa's infrastructure, roads, rail, energy, you name it. China is involved in that. Is this something though that you do discuss with the Chinese officials?
Yes, we discuss with Chinese officials two things. We need also to invest in human capital, which is something that is also a constraint. And when I talk about human capital, we had a huge progress in access in Africa, primary education, secondary education, but we had a little bit of a decline in quality. So we need to strengthen the quality, but also to train people at this level, secondary and tertiary education, to help them being ready for the needs of the labor market. We often, and sometimes I'm surprised when you meet some people from the private sector, we are telling us that our problem is not to give jobs, is to find people who are qualified to really meet the challenge that we are facing. So to increase adequacy between training, schooling, and the need of the labor market is one of the big challenges. Third one is investing in science and technology. All countries, and particularly in Asia, have been investing a lot in science, technology, engineering, and mathematics, STEMs. And that may help increasing the productivity in those economies. Today, only 25% of people coming out from the higher education in Africa are trained in STEMs. This needs to change radically. And I think China can be a good partner in that area, because China has been able to really learn the technology from other countries, adapt it, and be able to invest also to R&D. So what China has been able to do in a vocational training, in engineering, is something that we see extremely relevant for Africa if we want to increase the value addition in our economy.
Let's talk about energy. Over in South Africa, the country's newest sustainable energy project has just come online. It's called the Jasper Solar Project. It's a 96-megawatt solar power plant, and so far it's the largest of its kind in Africa. It's the end result of a series of investments by a consortium that included Solar Reserve, the Kansani Group, Intercon Energy, and Google. Travis Andrews has the details on this $200 million facility from the Northern Cape.
As the sun beats down on a remote section of the Northern Cape, its powerful rays are being harnessed by the latest arsenal in tackling the country's immense power needs. The Jasper Solar Project is the largest solar power plant built in the country so far and comprises of over 325,000 solar photovoltaic panels, enough to power some 80,000 homes. It's located in the sun-soaked interior of the country, an ideal location to maximize on the sun's energy and create electricity.
South Africa is blessed with high solar irradiance levels. The Northern Cape specifically has probably got the highest solar irradiance levels in South Africa. It's got a low rainfall, as you can see, and very low pollution in the air, which makes it ideal for solar projects.
The main part of the power supply is the photovoltaic panels, which were imported from China and when constructed stood as large as 350 football fields. It's also named after the jasper stone, which is found in abundance here, along with nearby coal and iron ore reserves, making the region a mining hub, an industry known to have immense power needs.
There are a number of large mines in the area, and which have a huge energy demand and draw power off the grid, and that's where the demand for these solar projects have come about, to construct these solar projects in this area, which eliminates the requirements to transport or to transport power along power lines from the northern parts of South Africa, 800 kilometers away.
The project is already feeding power directly into the grid, something that couldn't have come at a better time, when rolling blackouts are being experienced throughout the country.
It produces current for about 6 hours of the day, so it is producing a considerable amount of power to ease the load on Eskom.
Along with its sister plant Lesedi and a new concentrated solar plant which is still in its bid phase, all could make headway in reaching South Africa's goal of achieving a 30 to 40% carbon emissions cut by 2030. South Africa's move to incorporate cleaner power into its energy grid does seem to show visible signs of growth now. With the Jasper solar plant now complete and online, and an even more ambitious project planned for this region, the country does seem to be leading the way in sustainable power generation on the continent. Davis Andrews, CCTV, from Tansabane in South Africa's Northern Cape.
Now, still on energy matters, but with regard to commodity, keep in mind Brent crude is down about 13% or so in the last week, and the carnage, it seems, is still continuing. It essentially shrugged off the positive economic data from the jobs report coming out of the United States. Brent crude down to around 5-year lows. The Saudi price war still very much in progress, apparently. We'll show you how to make sanitary pads from papyrus. This is a story of a solution from a Ugandan innovator. Next. Welcome back. Maca pads are helping thousands of disadvantaged Ugandan women and girls who'd essentially otherwise be unable to afford sanitary pads manufactured by international companies. Now, the Maca pad is the brainchild of Dr. Moses Muzasi, and it's manufactured from papyrus reeds. So far, it is the only biodegradable sanitary pad in Africa.
An ingenious innovation in Uganda is turning the long-ignored and abundantly available papyrus reeds into sanitary pads, helping thousands of disadvantaged women and girls in the country who would otherwise be unable to afford high-end sanitary pads or towels. The brainchild of Dr. Moses Musazi, a senior lecturer in Kampala, Maca pads are the only trademarked biodegradable sanitary pad in Africa. A packet of 10 costs less than $1. The process of making the pad involves the crushing of reeds into pulp and then mixing it with paper, drying it in the sun to produce a highly absorbent material, which is then cut into pieces and packaged. The final product is passed through an ultraviolet light to kill bacteria and germs.
Initially it was the poor girls, but then we found out that poor schoolgirls cannot even afford $50 for a packet of 10. So we said, okay, let's widen our market. And therefore now we sell them to anybody who can afford it. At the moment, because refugees are looked after by United Nations High Commissioner for Refugees, those are biggest market here or customers. What we do, we employ refugees and also employ other local people to make sanitary pads. Then UNHCR decided that they will buy these pads for them. So that's our biggest market at the moment. But we sell them to anybody, and they're useful to any woman.
Due to poverty in the country, many girls resorted to using improvised unhealthy materials, sometimes made from banana fibers and even old newspapers. The Maka pads are internationally verified and certified safe to use.
Of course, you have to meet the international standards for sanitary pads. That's what it is. But the process is long, from one stage to another and to another and to another. Eventually, you end up with a sanitary pad that meets the standards of having an absorbent, a non-woven material, a plastic on it, and of course sterilized for sanitary purposes.
I think they're good for Ugandans because, like, the women in the villages are able to afford them. Since in the villages, women cannot afford very expensive things, and this thing can help them because instead of using towels, clothes, like those dirty things, they're able to use these pads because it will be of cheaper cost for them. And yeah, it's a very good idea.
The country's educationists say there's already an improvement in school attendance by girls in regions where the Maka pads are available. According to the World Bank, girls in developing countries miss up to 4 days of school every month due to periods. Dr. Musazi's company produces 5 million pads annually. Valdikarosa, CCTV.
Now, just before we wrap up, a quick run through currencies here for you. Here's what you need to know. The Kenyan shilling essentially ignored developments at the ICC. The dropping of the case, it seems, had already been priced in. The rand is at 9-week lows. 11,377 is the number you're looking at. Eskom's power cuts, of course, weighing in on the local currency. And finally, and this is the interesting one, the Naira closing at about 180.1. Overnight lending rates, however, soaring all the way to 30%. The central bank taking some $2 billion, give or take a few, out of the system as a whole. Some pretty aggressive liquidity management that certainly will continue later on next week. That's it for this edition of the program, however. Remember, you can send your feedback to globalbusinessafrica@cctv.com. And of course, when we're not on the airwaves, Facebook and Twitter are your ports of call. The news continues over there 24/7. Thank you for watching. Mahiamoto is up next with Matchpoint.